Sell-off on Wall Street today. Is fear of recession behind this? We talked to a veteran trader coming up today on Business Matters. Good afternoon, and thank you very much for joining me here today. I appreciate you tuning in. I'm your host, Don Ma. Okay, on to Wall Street. Losses today, following a much weaker than expected jobs report. Big banks now betting that the Federal Reserve will cut rates faster and deeper to spur the economy. We have full details on the jobs report later in the show. All three major indexes, as you can see here, in the red. But not as deep as they were this morning earlier. So the Nasdaq is down almost 2.5% today. It's now down 10% from its all-time high on July 10th. Okay, the Dow shedding 600 points, down 1.5%. S&P 500 down 100 points, and that's 1.8%. Okay, let's move on to the big losers today. Intel stock down a massive 26% here. We'll have more info on that later in the show. Meanwhile, Tesla down about 4% here, and other tech stocks, including Meta, Nvidia, Alphabet, all in the red, all down right here. Big bank stocks also taking a beating today. That's including Bank of America, JP Morgan Chase, Wells Fargo, all in the red here, as you can see. Meanwhile, investors at the same time also buying bonds. The price of 10-year treasuries rising today with yields falling 18 basis points, closing below 3.8%. And by the way, this is the lowest level since December 2023. Okay, so keep that in mind. We're going on to oil right now. Big oil earnings out today. Chevron shares falling sharply on weak second quarter earnings. Stocks down over 2.5%. The company warning that oil output this quarter was slip along with refining margins. And that surprised investors. But it's a different story over at ExxonMobil. It is posting a better than expected second quarter profit. The company is increasing its annual capital expenditure guidance as well. On top of that, and also for your information today, oil prices falling by more than $2. This is the fourth straight weekly decline, settling at an 8-month low. So the decline follows weak U.S. economic data and falling manufacturing activity in China. So what is the price of oil telling us then about the health of the global economy? Earlier, I talked to Tom McNulty. He's the president at TJ McNulty & Company. Listen. Is there a worry that we may be entering an economic slowdown? And with those fears, that is potentially making people think that demand won't be as high as before, and that's what's driving prices down.
Yes, that's correct. I think there are concerns that demand is weakening or will weaken in the second half of the year, but globally, not in a particular region. It seems to be diversified across all regions, that there is economic weakening. Depends what terms you want to use. Is it weakening? Is it a slowdown? But it's definitely a flattening. There was a jobs number, the last couple of jobs numbers in terms of the U.S. have been maybe okay or perhaps slightly weak. There's data coming out of Asia of some weakening, and certainly manufacturing data from China that looks a little bit lower than forecast. So the demand side appears to be weakening, and it's really everywhere. And that, makes it harder for oil prices, commodity prices, to jump on news of any kind. I think that is correct.
What do you think would happen if the conflict in the Middle East intensifies?
I think it still has the ability to put upward pressure on crude prices, but not in the way it used to in decades past, because there's still a lot of production in other parts of the world. There's a lot of production in this hemisphere, not just in the United States, but you'll see certainly Brazil, Guyana. There's also West African production. There's production in Asia. So it would drive prices up, but not in the way that it used to when prices would really move fast, $10, $15, $20 on a war shock. I think would be more muted because there is more diversification of supply.
Okay, last question here. What's your outlook for the rest of this year when it comes to prices at the pump?
I think gasoline is still going to be in this range. Here we are in the U.S. around $3. Demand has been kind of weak. As I think we've talked about the so-called summer driving season. I just don't see that anymore. I don't know anybody who's going on a road trip. I think that demand for refined products has been relatively flat, and that moves with the economy as well. So as the economy slows, and if in fact it moves into more of a decline, then the demand for refined products will weaken. So I just don't think prices have a lot of upward pressure. The hurricane season can give you temporary gasoline price movements if a hurricane moves into the Gulf, but they usually don't last that long.
All right, Tom, pleasure speaking to you today.
Great to see you as always. Have a great weekend. Thank you.
And the big loser on Wall Street today is Intel, the company stock falling a massive 27%. It's down 50% in the past 12 months. And earnings missing estimates on the top and bottom line, announcing it's laying off 15% of its staff. That's over 17,000 people by some estimates. One Wedbush analyst telling us that investors are getting cold feet over Intel's promise to catch up with competitors by 2030. Intel CEO admitting that our revenues have not grown as expected, and we've yet to fully benefit from powerful trends like AI. Our costs are too high, and our margins are too low. Intel's revenue of $12.8 billion is down 1% from the year prior, with losses totaling $1.6 billion for the second quarter. Okay, let's talk a little bit about Amazon today. Its shares also cratering. The firm reporting slower revenue growth, net sales up 10% year over year, and this is down from last quarter's 12.5% growth. Let's have more details on this.
Amazon shares fell after it reported slowing sales growth and weaker than expected guidance. It had net sales of almost $148 billion, up 10% from last year, but lower than last quarter's 12.5% sales growth. Amazon says it expects third quarter revenue to be between $154 and $158 billion, lower than analyst expectations. CFO Brian Olsavsky said last year's consumer trends are continuing into this year.
Consumers being careful with their spend, trading down, looking for lower ASP products, looking for deals. That continued into Q2, and we expect it to continue into Q3. We're seeing signs of it continuing in Q3.
Olsavsky says there's also less shopping because the news is distracting customers. Stories about the Paris Olympics and the attempted assassination of former President Trump draw people's attention away from shopping. He says Amazon sold more products, but they were cheaper items, leading to lower revenues.
Inflation is hurting everybody. I think inflation is so misunderstood because if the inflation rate comes down, that does not mean the cost of living comes down. It means the cost of living goes up at a slower rate.
Analyst Vijay Marolia says inflation is a reason people are more money conscious. He says the cost of living is substantially higher than it was in 2019, and it's not going down. Marolia says this may not matter too much for Amazon because its main concern is really Amazon Web Services and AI. Amazon's product selling business has always operated at a loss, with expenses exceeding revenues. Vijay says its services, such as Amazon Web Services, along with AI, are what investors should be looking at.
Okay, now let's take a quick break. But coming up after, we dive deep into today's weaker than expected jobs report. The unemployment rate up for the fourth straight month. Stay tuned for that and more. Don't go away. And welcome back. Appreciate you staying with us. Let's go through some of today's top headlines. The unemployment report, or rather the unemployment rate, climbing to its highest level since 2001. So government data showing that far fewer jobs were added than expected last month. And off of the back of that jobs report, stocks are tumbling. All three major indexes in the red, with Intel falling about 26%. And the company missing earning estimates as well today and estimating that it's laying off 15% of its staff. That's about over 17,000 people by some estimates. And VP Kamala Harris has secured enough delegate pledges to become the Democratic nominee for president. She clinched the nomination during a virtual call today. Democratic National Committee Chair Jamie Harrison said that he was, quote, so proud to confirm that Vice President Harris has earned more than a majority of votes from all convention delegates. He also said that the DNC is the party of hope. Listen.
My friends, that's what this party is all about. It's about giving people hope. It doesn't matter what background you are, what race you are, what religion, who you pray to, who you love, how you identify yourselves. Every person in this country deserves and should have the opportunity to live the American dream.
Reports say the VP called the DNC headquarters following the virtual call to say she will accept her party's nomination for the White House. The DNC convention is scheduled for later this month in Chicago. And the Justice Department filing a lawsuit today against TikTok and its parent company ByteDance for failing to protect children's privacy. The government claims that the Chinese-owned social media platform broke the law. The Children's Online Privacy Protection Act requires services aimed at children to obtain parental consent to collect personal information from users under 13. The DOJ fears that TikTok improperly collects vast amounts of data on Americans for the Chinese Communist Party. There's also concerns about how the social media platform can potentially harm users. The Federal Trade Commission joined the suit, saying that it was aimed at ending TikTok's unlawful massive-scale invasion of children's privacy. The FTC is seeking penalties of up to $50,000 per violation per day from TikTok for improperly collecting data. And the Secret Service should have had eyes on the roof where an attempted assassin fired shots at Donald Trump last month. That's the message from acting U.S. Secret Service Director Ronald Rowe in a news conference Friday, repeatedly asserting that the Secret Service is ultimately to blame for the security failures, emphasizing that local police forces should not be blamed for the security failures that led to the shooting.
This was a Secret Service failure. That roof line should have been covered. We should have had better eyes on that. Every single person within the Secret Service feels the weight of what happened. We are in an unprecedented threat environment and a high operational tempo during this presidential campaign. The men and women of the Secret Service are working incredibly hard and doing their jobs under difficult circumstances.
Rowe also said the Secret Service will need to earn its trust back, and he said the Secret Service will not be providing real-time updates of any potential discipline for agency employees for the security failures as its internal reviews move forward. The acting director said an ongoing mission assurance review will determine potential policy violations. If violations are found, there will be a parallel disciplinary review. Okay, now getting into today's surprising jobs report. Last month, the U.S. economy added just 114,000 jobs, and that was under expectations, which were 175,000. Now, the unemployment rate rising to its highest level since October 2021, and this is all according to new data released today by the Labor Department. So wages rose just 3.6% from July 2023, and this is the smallest year-over-year gain since May 2021. So the average work week fell to 34.2 hours, suggesting that maybe employers don't have much to do for their employees. Meanwhile, July job gains were concentrated in just a few industries. The breadth of job gains continued to narrow. The number of people working part-time for economic reasons increased by 346,000 to 4.6 million. All right, joining us now live is Julia Pollack. She's the chief economist at ZipRecruiter. Julia, a hectic day today. There's been a lot of worry surrounding this jobs report. Tell us to start off, what are you feeling about this?
Well, the labor market has been slowing for 2 years, but instead of settling at the pre pandemic pace, it has clearly now deteriorated further. And that deterioration seems to be broadening and accelerating. And that is what had investors spooked today.
Do you think the reaction from markets, do you think it was justified?
Yes, I do. There are some economists who are saying, wait, this is an overreaction. 114 is still a strong number, 114,000. It isn't in the context. It is actually only 33,000 jobs in the private sector, excluding healthcare. The bulk of the economy, most labor markets have weakened substantially. They're much weaker than before the pandemic. The pre-pandemic average job gains outside of healthcare in the private sector were 137,000 a month. And so this is a real deterioration, and it's a self-inflicted wound. It was not necessary to get here. Cutting rates earlier would potentially have landed us in a situation with on-target inflation and a stable labor market rather than a deteriorating one.
And on that point, I'm very curious here because I'm sure the Federal Reserve had this data point at their meeting a couple of days ago. Why did they not?
I'm not sure they did.
They didn't. They didn't have this data. Okay.
No, I don't think they did. Yeah.
Okay. Oh, did they have any idea of where this market was going? Maybe they should have cut at the July meeting.
So it was interesting to me how optimistic their statement was. It was interesting how they classified inflation as being somewhat elevated still, when there are many measures of inflation that have it all the way back at 2%. The characterization of the labor market as coming into balance was also a surprise because it looks to many labor economists as though the labor market is tilting off balance, and the risk of decline has gotten bigger. That said, on the bright side, the Fed has lots of policy room. They have enormous room to cut. And so I'm not so worried about a recession. I think that just as they were too slow to react, but then reacted very quickly on the way up, they could also cut quickly on the way down.
Right. I'm sure they have plenty of tools here to turn this around. But let's also, of course, talk about the unemployment rate here, ticking up to 4.3%. And what I wanted to ask you is the SAM rule has been triggered. Is the idea of a recession not as far-fetched as before?
So historically, when the unemployment rate has risen this much, further deterioration has been on the cards. And that's because the labor market can quickly get into a vicious cycle where job cuts fuel consumer spending cuts, which reduce business revenue and lead to further job cuts. It's not necessarily going to be the case this time around. If we were at the zero bound of interest rates, if interest rates were 0%, 0.25%, I would be very, very worried about a recession given the latest labor market data. But we're not there. And the Fed, with its full toolbox, can quite quickly change the situation on the ground.
Okay, just a couple more questions here. I want to know at ZipRecruiter, what are you hearing from companies? How are they feeling about the economy?
So employers are saying that the consumer is still strong, household balance sheets are strong, business balance sheets are still strong. They see lots of opportunities to expand and grow, but they're not taking those opportunities right now because borrowing costs are so prohibitive. And those investments that they would like to make don't pencil out at these rates. So we see a situation where rates coming down 100 to 150 basis points could make a huge difference and cause many, many companies to go ahead with opening that next location, getting another warehouse, getting another truck, and creating many more jobs.
Okay, just about 60 seconds here, and a quick question. How many basis points do you think we're likely going to see in the September meeting?
Well, that's anybody's guess. Of course, initially people thought that it was likely we'd see 25 basis points. Now, many observers are saying 50 basis points may be on the cards.
All right. Thank you very much today, Julia.
Take care.
Okay, and finally, something soft for a Friday evening. NTD's Daniel Monahan speaks with the founder of an organization dedicated to the practice of forest bathing to find out about its benefits.
The Japanese practice of Shinrin-yoku, or forest bathing, involves therapeutic relaxation where you spend time in a forest or natural area. The system has gained popularity in many places across the United States. Amos Clifford is the founder of the Association of Nature and Forest Therapy.
Forest bathing is fundamentally a practice of spending time in nature in a way where you leave behind the distractions and are just gentle with yourself in terms of taking your time to notice how is nature interacting with you through your senses, through your intuition, how's it affecting your heart.
In 2009, researchers from Japan did experiments in 24 forests across the country measuring stress levels in participants. After just 15 minutes of viewing or walking in the forest, participants showed a significant decrease in stress-related measurements. Salivary cortisol, a stress hormone, dropped by almost 16%, pulse rates fell by up to 6%, and blood pressures fell too.
Well, we are nature. The healing power is in our bodies. But when we take ourselves out of an environment that we're evolved to fit in, then our bodies don't necessarily know how to handle that well.
Forest bathing excursions can last from 90 minutes to 3 hours. Clifford says there's no need to travel far.
If you're in a beautiful forest, everything that you want to go on to a hike to encounter is right here. Every spot you're at, it's there. And so a lot of the practice when you're guided is the guide is just going to help you learn how to notice.
Clifford says there's a sequence that you do in forest bathing where you go through all the senses.
But we're also going to go into what's the felt sense of your body being in this place. What do you notice about what's going on in the heart region inside your body? Not telling them what they should notice, just inviting them to notice whatever it is they notice.
Those living in a city can get the same effect in a park. For Clifford, there's more to forest bathing than the documented health benefits.
It has to do with coming into relationship primarily with ourselves. So there's an aspect of ourselves. It's the deepest truth of who we are. What is the essence? Who were you born to be? And what happens is we get tamed in a way that we forget or we suppress our knowledge of who we're supposed to be, and we just, instead we get a job and we get through life the best we can, often with a sense of there's something missing here.
Clifford believes that getting back in touch with that inner self is the best way to be of service to yourself and the world.
Amos Clifford is the author of the best-selling book, Your Guide to Forest Bathing, Experience the Healing Power of Nature, which has been published in multiple languages. For those interested in learning more about forest bathing, you can go to his association's website at anft.earth. Daniel Monahan, NTD News.
And that's all the stories we have for you today. Thank you very much for watching. Have a great weekend. You can email us at business@ntd.com or leave a comment online. I do read them for every episode. Thank you very much. We'll see you back here on Monday.